Hello and welcome back to Investing for Generations, your channel for high quality stock research for long-term value investor. And today I want to take a look at my banks in my portfolio and talk about if I think banks are still a buy in this overall overvalued market. And we'll just take a look at JP Morgan, Scotiabank and Wells Fargo, because they are part of my portfolio. You see here the Bank of Nova Scotia with 5.49% of my portfolio is the biggest bank position in my portfolio, followed by JP Morgan with almost 4% of my portfolio and Wells Fargo with 3.19% of my portfolio. So overall, it's around 13% of my portfolio overall, and so banks are quite heavily weighted in this portfolio. And so I didn't look at the banks for a while because there was just nothing to see. They make the business, they earn their money fine, and even better, they increase in the market price. For example, JP Morgan, I bought JP Morgan here, you see this on the green dots, in 2020 for an average $94, gained already 76% in price, and so I'm up $2,160 already with JP Morgan. And almost the same with the Bank of Nova Scotia or Scotiabank. I just bought nearly the bottom in 2020 in the pandemic crash, and now my whole position of 106 shares of the Bank of Nova Scotia is up 72% or $2,951. And last but not least, also Wells Fargo, very good after really difficult times for Wells Fargo. Now my 79 shares are up 58%. So overall, that's really good. A very good performance over, let's say, 1.5 years or a little bit more than a year. The question is, should I sell at some point or just hold, maybe even add to my position? So lately, Wells Fargo and JP Morgan reported their earnings, their Q2 earnings, and these numbers was quite good. JP Morgan, for example, had a big jump in the second quarter earnings. I just talked a little bit more in the other video about JP Morgan and also about Wells Fargo, because Wells Fargo, after all these problems, all the scandals, just swung to a profit in the second quarter and reported a profit of $6 billion in the second quarter. And so business quite good with both of them, and even with Wells Fargo it seems like they can make the turnaround. And now this week also Scotiabank reported their earnings for the last quarter. And Scotiabank came out with quarterly earnings of $1.64 per share, beating the Zacks consensus estimate of $1.50 per share. And they also posted revenues of $6.31 billion for the quarter ended July 2021, surpassing the Zacks consensus estimates by 3.23%. So also Bank of Nova Scotia with quite good numbers in the last quarter. And then on top of that, Bank of Nova Scotia declares a dividend of 90 cents Canadian, which is in line with the previous dividend, and the forward dividend yield is at 4.48%. Quite a lot in these markets. And dividends really a big point, especially with Scotiabank, because the growth in the bank's earnings have resulted in dividend increases in 43 of the last 45 years, one of the most consistent records for dividend growth among major Canadian corporations. The bank declared its initial dividend at the rate of 3% per annum on July 1st, 1833. Payments have been made continuously since. So quite an impressive dividend history of Scotiabank, quite safe dividend payer. And also JP Morgan with a forward dividend yield of 2.24% is a good dividend payer, and also Wells Fargo started to pay a dividend again of right now 1.62% in the forward dividend yield. But of course, with these higher prices, the expected return in the future will be lower. That's just a given. And so the question is, what to expect. With the example of Scotiabank, which just climbed up from under $40 to currently $63, it's just a given that the returns in the future will be lower, and you can't expect in the next 12 months another 70% of gain, of course. And so the question is, what can you expect? What we know is we have a dividend yield right now of a little bit over 4%. This seems quite safe. And then with these banks, you can also expect a slow growth of maybe 2, maybe 3%. And so you come overall to an expected return in the future of maybe 6, 7, if you're lucky, maybe 8%. That doesn't sound a lot. That doesn't sound like this is very spectacular, and it isn't. Of course it isn't. But when you look at the current interest rates here, for example, for Europe, because I live in Germany, in Europe, then you have interest rates, if you put your money at the bank in Germany, of 0.06%, in Sweden 0.2%, France 0.1%, Austria 0.08%, and so on. And so, of course, if you compare that to a dividend yield, only a dividend yield of 4%, or even just 2.2% of JP Morgan, I think the best bank, the most stable bank in the US, then it seems like maybe these investments are not that bad anymore. Of course, with Wells Fargo, there is a higher risk. They just turn around this big ship. I'm still not 100% sure they really can turn around totally, and so there is a higher risk. And also, when we look in the lows, Wells Fargo was almost at only $20 per share. Now they are at $49. So there is a big gain over the last few months. And so a lot fantasy of the turnaround is already priced in. And so, of course, if Wells Fargo disappoint again, then there's also a lot of room to fall again. And so there is a higher risk. But overall, my conclusion is I will hold my positions, all three, especially Bank of Nova Scotia and JP Morgan. I think I will hold them for the long term. Of course, if the price goes through the roof and there is the expected return go down to maybe under 5% or even less, then at some point, of course, it's also time to sell. But if it is not the case, I will just hold these two positions, receive my dividends, a little bit of growth, and everything is fine. With Wells Fargo, I just have to see how this will go on and see how the turnaround works, or maybe don't work. And then at some point, maybe it's time to sell also Wells Fargo. We will see how this will work out. But for the moment, I will just hold all three of them. If you like this video, please give me a big thumbs up. And if you're new to my channel, you will find deeper analysis to all of these companies in my portfolio. There I go through the business model, through the management, through the financial numbers, calculate the intrinsic value, tell you when and why I bought my positions. Then also every weekend I give you an update on my portfolio with all the transactions, all the received dividends, so you can really follow me on my road to financial freedom. And if you like that, just follow me, subscribe to my channel, and then we will see you next time on the weekend with my weekly update. See you then. Take care. Bye bye.